Hey everybody, it's Pete. Welcome to a new episode of Stocks for Breakfast. Thank you so much for joining me today. Today we're going to talk about chart reading. I know I spend a lot of time talking about going from chart reader to tape reader to somebody who gets paid on a monthly basis, and that's known as somebody who's a trader. There's a big difference between them because setting up the ideas is really where the money is made. But we're going to go all the way back to chart reading today, and we're going to discuss the basics of why trading is a lot easier than many people make it out to be, and I'm going to blame computers for that, and not in an algo way where you kind of think like the algos are out to get you. It's in the fact that we can drill down to so much, and especially to so many shorter time frames that we can kind of get lost in those tiny time frames and give them too much credence, too much importance, when really what matters is where the smart money is pushing stocks around. Because you can bet your bottom dollar, big money, smart money, they're not watching the 1 minute chart. That I can tell you. That I probably did watching a daily chart, quite honestly. But they are moving stocks over time. And that's really where the easy part of trading, and probably you can turn your trading around super quickly. At the very least, and I talk about this a lot, is the very first thing you need to do is to learn how to not lose money so that you're around long enough to understand how to make money, because you need experience to eventually be in good trades, and then you learn how to hold those good trades longer, or learn which trades you should be booking profits in quicker. It could be a good idea, but maybe the risk reward is not great because it's obvious, but the profit potential is a little bit limited. So maybe you find a good entry and you know you're going to get out a little bit sooner. The problem that traders have now, especially with everything that we have available to us, we can have 4 monitors and 6 monitors, or whatever it happens to be, and then you drill all the way down to watching what's going on over the next minute. Even just saying that sounds a little silly because when millions and millions and millions and millions of dollars is getting allocated to a stock, or when it's being dumped, when shares of a stock are being dumped. But let's stick with buying. It's just easier to identify at this point. It's not being done by watching a 1 minute chart. It's being done by moving shares or buying shares over a longer time period, which is kind of funny too, because one of the things that we're seeing in the boot camp right now is there's kind of this revelation that I walk everybody through. When I tell everybody when they first come into the boot camp, it's actually easier to allow your edge to do the work by trading more stocks at the same time with less shares, and you're actually using the same amount of buying power, because you're actually, the easiest way to say it is, instead of having 1,000 shares of one stock where everything is reliant on that timing to be perfect, on it moving exactly within the time frame that you want within your risk parameters, versus let's just say four stocks of 250 shares each, where now you have lower share size per entry. You could work the order a little bit, meaning you could add or remove shares a little bit more freely because you're not maxing your buying power. You could quite honestly let the stock breathe a little bit more too, where you don't have to be stopped out to the exact penny. In the context of spreading that trade out, allowing for the probabilities to work quicker. Because if you take one trade and you need 10 to get profitable, you need to take one trade. But if it takes 10 trades to get profitable and you take 4 good trades at the same time with lower share size, here's the beauty of what you're doing. You're actually lowering your risk, waiting for the market to tell you this trade is working out or it's not. If it's not, you simply get out with less risk and less loss potential. But then let's say 2 out of the 4 work, move in your favor. 2 don't. You take a loss on those 2, which is now a much lower risk profile. But the 2 that you get feedback from the market and it says now it's moving in my favor, now you add back those shares that you just took off for the trade that wasn't working out. But now you have a nice head start. So you actually lose less and make more just by managing your share size properly. But that share size for large institutions, and I don't know why I keep doing this, they're working their orders the same way over time, and that's what we want to do. So we want to zoom out to a picture over time where we could see if it's obvious, and only then drop down to the lower time frames to fine tune our entries and look for spots to work those positions. So we're actually going to use Apple as an example, and we're going to do what's normally called multiple time frame analysis to set up ideas that have a much higher probability of actually moving in our favor, and understanding when it's not in that situation where we wouldn't even look for entries if we want to be a buyer. And that's a big deal, because I think from what I see with new people in the boot camp, which, by the way, if you're struggling a little bit, definitely get involved in the boot camp, because just in 30 days you could learn what not to do, and that instantly turns you around. But if you actually learn what not to do and you have some experience, it could really catapult you in a big way. And we saw that really this week, where the market's been challenging, but we found so many good stock-specific ideas that we are in the right ideas and making money while a lot of other stocks are drifting. And that's kind of exciting, but that's a part of what we're actually going to show you today, just a tiny part, but we're going to show you. So we're actually going to hit the charts. Think about what I said about managing multiple positions, and you'll see that when you're forcing the market to tell you when it's okay versus you saying, I'm going to time the entry exactly perfect, it takes all that pressure off of trading, and now it's just managing the positions. So we're going to start out with what is known as the highest time frame for what might an active trader be. So we're actually going to zoom out to the the monthly chart of Apple. So now we're immediately saying, okay, I'm not looking at these micro time frames. I'm doing what might actually be considered a macro picture, which is I want to get a good long-term feel for what Apple is doing right now. And we're actually going to focus on this, and this, because there's three different windows of opportunities here for Apple. And let's just drill down to the most simplistic concept, is probably the only way to put it, where from 1 month to the next, how is Apple trading? So remember, we said large money, the smart money, is pushing money around and allocating money to stocks over time. So that's not by the minute, that's not by the hour. However, we can zoom out a little bit and say, what did the smart money do in Apple this month? What are they doing it in this month? What have they done the recent months? And is that picture still the same? Which now we go from chart reading to tape reading. So if we look at this window right here, there can only be one way of assessing this. If the stock is making higher highs and higher lows from 1 month to the next, that means over time, over at least 20, 21 trading days, buying and active buying was going on in that stock. And there is an opinion by somebody who could push Apple around, and it could be the consciousness of a lot of people at the same time, that the stock is going higher because they're willing to pay higher prices. And it happens from 1 month to the next month, to the next month, to the next month. These are the situations where now you say, from a bigger picture window, smart money is still accumulating the stock, is still buying the stock. So now it's our job to piggyback on that smarter money. And this is where we start to drill down to narrow the picture a little bit to what's going on now. So you can see here in this window, this is the picture that we just looked at. And this is actually last year. Then we break it down to this year. So you can see the 2 months where the market and Apple were actually going down. And now there's a bigger window again where it's going up. But this is the window that I want to talk about right here. And you can see now we've gone from the monthly chart. Let's just zoom out to that again. So this is the monthly window, and down to the weekly chart. And this is what's interesting here. In the midst of this move to the upside, we said now over the last 4 months, it's been very, very obvious that the smart money is pushing Apple around. But here's a key point. For these 2 weeks, again, this is a weekly chart. For these 2 weeks, the story changed. For these 2 weeks, profit taking was coming in. For these 2 weeks, and I remember this actually pretty well, there was a story about China and Apple, US tensions and all of that kind of stuff. But regardless of the news, for these 2 weeks, the story changed from what you saw in the bigger picture. So the bigger picture tells you, pick a side. Join us on this joyous ride as we continue to be buyers of this stock. However, during this 2-week period, you need to understand that the tape changed. Something changed to the story. In this particular window, there was indecision. for that entire week, it opened and closed at the same window. So now you need to be going into the market the following week, despite the bigger picture, and saying, the story in Apple's changing a little bit. I'm going to change how I allocate my shares. I'm going to change how I see that stock right now, even though the big picture is still pointing higher. And what happens is the next week actually now unfolds. So as we talk about all the time, you constantly say to yourself, what do I want to see? What don't I want to see? And in this particular instance, that particular week, in the context of all of this buying, the story changed. So now you take a step back and you make that leap from chart reader to tape reader, and you say, I'm going to build an argument here for Apple. I still love it long, but I don't love it as much as I did the previous week, because the story changed. It definitely opened higher. It definitely pushed higher, but it ended the week lower than where it started. And that's why it's a red candlestick. So now you go into the week saying, okay, only if that story changes back to what I want it to be, only then will I start to be confident that I should be buying Apple again on whatever time frame you watch. And it doesn't matter if you're a day trader or a swing trader. So we want to see this again. We want to see this again for that story to feel good, for us to have conviction. And look what ends up happening the next week. The exact opposite story of what we wanted to happen. So now as the week is unfolding, as the days are unfolding, it doesn't matter if you're day trading or swing trading, you're saying, I'm not seeing what I want to see. Apple, in the big picture, all of this money was still allocated, but right now they're selling. So I'm not going to try and buy while the smart money is selling this week. You see how that starts to unfold? Now, when this week ends, now you say to yourself heading into the next week, what do I want to see? What don't I want to see? The long-term picture is still good, right? So now you want to see this again. You want to start to see this unfold. As the week unfolds, you have that first print on Monday, it starts to trade, and the candle's going to either be red or green. And you can see the last 2 weeks, massive indecision here. And then this candle was actually red, right? So the next week, you want to see it open. And if you want to be a buyer to join all of this money, now you start to wait for it to be green or red, green or red. If it's green, now you could step back in and say the story is now back in this direction again. And lo and behold, that's what starts to unfold, and easier trades in Apple start to unfold. And this is really where trading becomes fun, trading becomes easy, and a heck of a lot less stressful, because you're not just saying, well, last week or last month, Apple was a buy, so I'm just going to be a buyer today. Or you're not saying, I like the stock because you like the iPad. You're saying, I'm paying attention to what the smart money's doing. I'm paying attention to the feedback the market's giving me. And depending on whether it's going up in the big picture and down in the weekly picture and maybe up in the daily picture, this is where we start to put the pieces together to get paid on a regular basis, because when all of the pieces are aligned, that's where trading is fun, and you can have conviction. And those boom, big moves that happen that you see, oh my gosh, I missed those moves. You're not going to miss them anymore because you start to put the pieces together. Now, there's a lot more to it than obviously what we're talking about today, but I want to get you thinking. I want to get you thinking that, okay, Apple on the monthly chart, it looked good. Apple on the weekly chart, now it's starting to pull back a little bit. So the story has changed a little bit, and that will change how you decide to get involved with that for now. So really the difference comes in is if the picture's not perfect, you now choose to do nothing, or you choose to lower your share size to wait to get feedback from the market in this strong stock. Because right now it might be going down, but you can put a little piece out there and say, okay, I like it. I found a little bit of support. I'm only going to put a little piece on because right now it's not perfect, but I like the longer term picture. Or what I do is I don't even get involved in that situation. I want it to be perfect. And that's the difference between consistency and banging your head against the wall. Because those two scenarios where the longer term picture is good, but it's not perfect now, if you start trading in that not perfect condition against the longer term picture, that's where you start to be, I made money, I lost money. I made money, I lost money. And then when the picture gets clear again, it starts to get easier again. So these are really the things that make trading fun, easy, and where it becomes predictable as far as getting paid, because you are only now trading the highest probability ideas. And this is kind of like a weird thing to say, but you want to lose money on your best ideas. we're going to lose money no matter what, because that's part of trading. A trading loss is a business expense. There's no reason to believe that you're never going to have a trading loss. So if you can immediately get that get that out of the equation where you think you're not going to have a trading loss, that also takes the pressure off of you, because now you're like, all right, I know I'm going to have to manage some losses, but I'd rather that was in great ideas with a high degree of following through, where I'm just piggybacking the smart money, and then you eliminate those ideas that don't make sense. Now that you kind of have a small idea of how to do that, now you're really just sitting back and looking for entries and exits and managing your share size. And that's where trading is, I'm going to use the word again, that's where trading's fun, because there's no pressure right now to be right or wrong. You're analyzing the charts, putting together the pieces as a tape reader, and then fine-tuning your entries in those good ideas. Traders that struggle chase price action. They just see it going up now, or they see it going up over the last week, and they don't want to miss it. So they have this fear of missing out. And then all of a sudden they buy at the wrong time because they didn't recognize it just traveled for 5 to 7 days, or it's stuck in the middle of nowhere. And you get frustrated and you start to doubt whether or not you can be a trader or not. And trust me, if you're watching this and you understood everything I just said, you have it in you to do this successfully. You just need to get that next step where you're putting the pieces together and you're not just sitting passively back chasing price action. So it's so much fun when you understand and how to do this at the next level. And we talk about it all the time. You're just not thinking deeply enough about what you're looking at. And once you start to really understand it, it's not that hard. It's not that hard. You just have to start using what you know now. And that's where it becomes exciting. So if you have any questions about this, definitely leave a comment below the video. I'd love to hear from you. And if you'd like to join me for the next 30 days, absolutely invest in yourself for the next 30 days and join the boot camp. I'd love to see you on the other side. Have a great day.